This is Turtle Soup, and what I'm about to explain to you right now will change your entire perspective on the markets. This one video will change the way you trade. This video is not for the ones looking for spoon-fed garbage. This is not a video containing the Holy Grail. I'm explaining concepts that have been explained in the past, and I am touching base on concepts that have never been explained. Pay close attention to every single word. Let's move forward. This is a bullish turtle soup. Very common. Everybody knows this. Common sense, give me something new. Okay, this is the bearish turtle soup. Everybody knows this, give me something new. Before we move forward, let me just explain the basics for the beginners watching. And if you are a beginner, first off, I would suggest not watching my content. This is not beginner friendly. All right, we have a range. We take out the range low with a wick and close back above the range low turtle soup. That's the entry. You are playing with external range liquidity, the extremities of a range. That is your entry. Your entry for a turtle soup is not in the internal range liquidity. No, your entry belongs in the external range liquidity, below the low. A turtle soup can be valid one of two times: with a wick below a low, no close below, or one close below, not two. As soon as there is two candlestick closes, you can eliminate the possibility of a high probability turtle soup. The same thing goes for a bearish scenario. Ranging, taking out the range high, tapping into external range liquidity. Anything above these highs is external range liquidity. Entry, short. The same thing applies for the bearish scenarios. If you get a wick above the high, that is a turtle soup. The second type of turtle soup that there is a one close turtle soup. The second close must be back below the high or back above the low. Let's look at a real example. Price creates the low, price creates the high of a range, high and low. Retrace into a discount market. Below the midpoint of a range is a discount market into a key level. Failure swing low, equal lows created. Sell side liquidity rests below these lows. These lows will act as a magnet once the buy side liquidity has been taken out of the market. Price then expands to the upside towards the draw on liquidity being the range high. No close above the range high, wicking into the range high. This is a 1 hour time frame. On the lower time frames, you will look for an entry above this high. Your target is the opposing end of the range. A close below the range is the break in market structure. How would you enter this turtle soup? Nobody on YouTube is telling you how to enter this turtle soup. Open up your notebooks. I am fed up of listening to this nonsense being spread around the internet. How to enter this turtle soup. First type of entry, 1 to 3R. How do you measure this? You know where your take profit is, but you have no idea where your stop loss is. Measure your take profit and drag your stop loss up from your entry till you see a 3R to R trade. 3R to R, open the trade as soon as the high is tapped into, not any random high. This high needs to be respecting the higher time frame order flow, narrative, market profiles, and key levels. Look at this CRT formation right within the turtle soup. Entry 1 to 3R, targeting the opposing end of the range. This is one way to enter a turtle soup. What is another way to enter? Higher time frame fair value gap with a lower time frame turtle soup. As soon as the high is tapped into within the higher time frame fair value gap, you enter short. Let's dive into this. I will show you some secret knowledge. ICT has talked about this very recently, and I am kind of mad at him for bringing this back up, as he taught this in the past very long ago and finally retaught this in the 2024 mentorship. Let's dive deeper into what concept I am referring to. Hopping onto a daily time frame. On the daily time frame, you can see right here, we have a clear fair value gap, a clear SIBI. Right? Wrong. Absolutely incorrect. This is not a fair value gap. Why is this not a fair value gap? This is indeed a SIBI. Sell side imbalance, buy side inefficiency. However, this SIBI is not a fair value gap. Not all SIBIs are fair value gaps. Where is the fair value gap? Would you believe me if I told you this was the fair value gap? Would you believe me? Or would you think I am making this up? If you're not taking notes already, start right now. This is going to get interesting. The reason why this is not a fair value gap and this little shaded region from the low of the order block to the high of this candle, why is this the fair value gap? Very, very simple. We broke below the order block. We now have an order block as a bearish PD array and this SIBI as a bearish PD array. What is the lowest point for the bearish PD arrays? The low of the SIBI. Perfect. The low of the SIBI is the closest zone of liquidity. Price is here. Where's the closest zone of liquidity? Right above here, entering this SIBI. Where is the next closest zone of liquidity above the SIBI's low? The low of the order block. These two candles are an order block. The order block was validated as soon as we closed below this low. The open and the low. What happened on the lower time frame? Let's take a look at the hourly chart. This right here is the hourly chart. This is the gap I showed you on the daily chart. From the low of the order block to the low of the SIBI. This is the fair value gap. This is the fair value gap. Your goal is to enter a turtle soup of the lower time frame inside of this fair value gap going short. 1 hour turtle soup within a daily fair value gap. Short entry as soon as the high is tapped into, coming down. These SIBIs are not fair value gaps. Fair value gaps are retraced into. These are not. These were never going to be retraced into ever. Why? As soon as price closed below this specific low, we confirmed a change in state of delivery. Price should no longer reach into these levels as long as a fair value gap forms, which did indeed occur as this candle created the high and the daily candle came to a close. Right over here. High formed, daily SIBI. Fair value gap located within the daily SIBI. Wait for a turtle soup of the range high. Use the ranging market profile. Breaking market structure. Breaking lows. Change in state of delivery on the daily time frame. Fair value gap within a SIBI on the daily time frame. Fair value gap, lower time frame turtle soup within the higher time frame fair value gap. Entry short. Where would your targets be? Where would your stop loss be? Your target first would be the range low, and secondly would be any other point of liquidity. So use the first key level to your left-hand side when going short. Your stop loss is the change in state of delivery, the level that caused the change in state of delivery. This is how to catch a monstrous move. So let's talk CRT. Important things to remember. CRT should not be used like a pattern. Pattern trading CRT is dangerous and not recommended. CRT should be used in conjunction with market structure. What is market structure? Market structure consists of bias. Where is price going? Narrative. Why it should go there. Directional order flow. How is price actually moving and forming? Market profiles. Are we ranging? Are we manipulating? Are we distributing or expanding? Are we retracing? Are we reversing? Key levels. Where are the higher time frame fair value gaps? Where are the higher time frame highs and lows? Daily highs and lows, weekly highs and lows, monthly highs and lows. Where are they? Mark them out. Time. Before even considering an entry, make sure you are within the specific time where trades become higher probability. CRT should only be used to shape your entry. First, you create market structure. Then you look for CRT. Then you look for the entry model. Let's take a look at an example. Firstly, we want to locate the Asia session high and low. This is a tip that I will give everybody. Every single day from 20 o'clock up until midnight, so 8 p.m. up until midnight New York time, UTC -5, will form the Asian opening range. This is for futures. On Forex, the open is 19 o'clock. Not 8, but 7. All right? Draw out the high and low of that specific range. Your next goal is to mark out specific key levels that you want to see price react off of. You need two of these, one at the low of day and one at the high of day. What happens during the London session? As we turtle soup the Asia session highs, let's just draw this out right over here. Asia session highs are being turtle souped. We come above and break below, changing states of delivery. What is the target if you are entering short in the London session? TP1, the midpoint of the Asia range. TP2, the opposing end of the Asia range. Very important. All right? Sweeping the Asia range highs, London session, sweeping the Asia range lows during the New York session right at 9:30 a.m. How can you have potentially gotten an entry down here to go long? Targeting the opposing end of this entire range. I will show you. First off, we need to look for a 4-hour key level. On the 4-hour time frame, you will hop on and look for a key level. Key levels can be highs and lows, fair value gaps, order blocks, breakers, mitigation blocks, etc., etc. As you guys can see, we have a clear 4-hour fair value gap right over here. And we have a clear 4-hour low right over here. Very clear. 4-hour low. Okay, let's drop down time frames to the 1 hour. The 4-hour low becomes a little bit more clear for us. This is the 4-hour low. What do you notice forming at exactly 9 a.m.? We have what looks like is a 9 a.m. CR model. Must be random. We have the 8 a.m. candle range low, the 8 a.m. candle range high. On the 1 minute time frame, we are going to look for a change in state of delivery. Why? Firstly, we have a key level in the form of this level right here. Let's make this a thick black line. This is our key level. This is the 8 a.m. candle range low and the 8 a.m. candle range high. Okay? Look at the 5 minute. Why are we looking at the 5 minute? Because the 15-minute CRT was not valid. For a 1-hour CRT, you can either have a 5-minute CRT as your lower time frame or the 15-minute. The reason I bring this up right now is because this is where so many of you struggle. I've been getting hundreds of messages asking about the 15-minute CRT. Sometimes it doesn't form, but the trades work out. That is because the 5-minute CRT is just as valid as the 15-minute. When you have both, it is extra confluence. 5-minute CRT confirmed as soon as this candle closed. This was the 9:35 candle. Okay, let's go on to a 1-minute time frame. This is the 15-minute CRT low. We're inside the 15-minute CRT. No 1-minute order block, but we do have a 1-minute rejection block. This is the rejection block. Do we have a 2-minute order block? Let's take a look. No 2-minute order block, but we do have a 2-minute rejection block. That would have been your entry. How about the 3-minute? So I'm going through all the time frames to show you that you can enter using anything. We have yet another rejection block. Let's go on to a 5-minute. 5-minute, no rejection block. However, the order block on the 5-minute was confirmed with this close above. Of course, the 8 a.m. range was already filled at that point in time. Anyways, back onto the 1-minute. You can see your entry would have been here. Right around here at the rejection wick. Stop loss at the lows. TP at the 8 a.m. candle range high, which is right over here. Okay? And that is that. Now, could you have aimed for higher targets such as these? Absolutely. Absolutely. Depending on your size, you can aim for these targets. Now, I just want to explain why we entered the 9 a.m. CR model here. Why this was not actually pattern trading. Why this was actually looking at the markets with the correct identifiers. All right, on the 15-minute time frame, you can see we drew the Asia range high and low. The Asia range highs were taken and swept. We now came to the Asia range lows. Was there any key level tapped into during the London session? No, there was no 4-hour key levels here. How do we know this? Let's take a look. Hop onto a 4-hour chart, and I will show you right now. No 4-hour key level, okay? Even if you want to consider this your order block, we never tapped into it here. No fair value gaps, no nothing, no 4-hour key level. Any 4-hour key level below us? Absolutely. Fair value gap, singular lows. This singular low right here. Perfect. Now we know that the key level was not hit during the London session, and that means that a key level will be hit during New York. Sweeping the Asia range highs, key level resting below Asia range lows, coming down, taking out the Asia range lows, turtle soup. This is the entry. Key time, 9 a.m. 9 a.m. CR model, forming at a key time, obviously the 9 a.m. candle. Forming in correlation with the Asia range. This is using market structure. We are at a range low, targeting a range high, market structure, profiling the market. And using the Asia range will help you determine the daily bias and narrative. So when price is above this key level here, so example, price is right over here, what would you be anticipating? Firstly, you have some questions to ask yourself. Was a key level tapped into during the London session? No. Okay. Does that mean this would have been a reversal point if no key level was hit? No. Okay, that means we are going higher. Fine. Where should we be going higher from? As soon as we hit a key level, then we go higher. Where is the key level? This specific low here. Why? This is a 4-hour singular swing low. Where is it located? Below the Asia session lows. Perfect. Our narrative and bias align perfectly. As soon as price taps into the key level here, we should assume that price will expand to the upside as the Asia range and London range tell us that the bias is bullish. Next, you wait for the 9 a.m. CR model to form and enter the trade. That is how you enter CRT using bias, narrative, market profiles, etc., etc. Dropping down time frames even further to a 5-minute. Let's advance the price here very quickly. 5-minute time frame. What do we see? Price is consolidating, ranging. Above what? Above a key level. What is the key level? This black line. When price consolidates above a key level, we will expand into the key level. As soon as price expands and taps into the key level, we anticipate an immediate reversal. This is the power of 3. Accumulation, manipulation, distribution. However, the market profiles, let me explain them once more. The market profiles are a ranging market above a key level, ranging, expansion, reversal. Very, very simple. If price was not ranging above the key level and price was ranging in the key level like so, do we need to manipulate the range low in order to break out higher? No. Why? The key level was already hit. Liquidity was already taken. If we create equal lows below the key level and see the change in state of delivery, that is enough. You do not need to wait for a turtle soup of this range that is below the key level. The tap into the key level is the turtle soup. And that is all that I will leave you with today. I hope you guys think deep and hard about this lecture. There's a lot that you can add to this. There's a lot that you can remove from this. You can create your own models using just what I explained with the Asia range. The most important part of this video was understanding how to use CRT in conjunction with your bias and narrative to catch the turtle soups. What turtle soup would you have caught in this situation? This one right over here. We turtle soup the range low. This is your entry. CRT right at the range low. Now go ahead and start studying. We will have another live stream in 1 month from now. If you guys want to partake in my daily live trading sessions, where I analyze the charts live in front of everybody, answering your questions, then go ahead, read the description, find my link, and purchase the 1-month subscription. I want to make something very, very clear. Do not join my group if you are an absolute beginner in the markets. I don't want you. I am looking for students who are dedicated traders, who are looking for the answers, who are constantly looking for more. Those are the students that I want to teach. If you are simply going to join my Discord and ask me questions regarding win rate,